From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Thursday afternoon, the 29th of August. I'm Nadine Blaney.
I'm Juliet Sully, so nice to have you back.
It's nice to be back, it really is, although that caught me off guard still. Look, Juliet, I came back on a day where we are seeing a bit of a flow-on effect from Nvidia's results, if we're honest, here locally. And I know that there's so much more to talk about reporting season and the like, but still, that was sort of the big headline that set the scene for our local open.
Yeah, and so many guests we've spoken to today said quite rightly, Nvidia really had to blow it out of the water with not only its result, but its forecast as well. And that's where it seemed to miss the mark. So a little bit of an Nvidia nosedive, if you will, in the after hours trade and how that plays through into Wall Street tonight. And also turbulent times for our market too. We're down 0.2% on the CBO 200. Let's get to the themes of the day, because we did mention some turbulent times, and I put this in because Qantas, one of the companies reporting today, speaking of turbulence, but you've also got the likes of MinRes, which was punished quite heavily after its result, and it really does seem, as we come to the tail end of reporting season, that you've got to blow it out of the park to get investors enthused.
Yeah, as much as things change, as much as they stay the same, because sometimes, you get in toward the end of reporting season when there's nothing much to write home about, and that certainly was the case when it came to MinRes in particular today, but also Wesfarmers. I thought that was pretty punchy in terms of the sell-off happening there, and primarily, Cettire as well. But Cettire we knew, that's no big surprise. Wesfarmers was the stock of the day. We'll get there in just a little bit, but with Nvidia, to your point, we will, it's not a one and done sort of impact, so we'll see what happens tonight.
Yeah, and we put in sneaky business there too, because tomorrow officially the last day of reporting season, who's going to come out at 4 p.m. with their report, and try and hide it, which sometimes happens, doesn't it, when they get in just on the deadline. So starting to see some late reports trickle through.
Particularly on a Friday afternoon. They call it taking out the trash. We will be on it. We'll also be on with the last call tomorrow from 3:30 p.m. on ausbiz.com.au. If you're listening to this in podcast form and you don't normally watch the last call, it's a bit of fun.
It is a bit of fun.
We've got a great panel that will cover a lot of reporting season. I think we might go into overtime with that one, and of course a macro panel to get us set up for the month to come as well.
All right, let's have a look at some of the sectors today. Energy was a real drag as we saw that weakness coming through in crude. Woodside, which reported a couple of days ago, and we spoke to Meg O'Neill yesterday, down by 1.4%. Remember, it rose after its earnings on its special dividend. Santos Beach Energy under pressure too.
Yeah, it was good to listen to that interview. Thank you for that. Just talking about, the confidence that they still have in paying out their dividend, even though, they're spending up big, as we learned in the past month or so. The price of iron ore has come under a bit of pressure, and that has impacted some of those big miners. Fortescue, number of broker upgrades coming in the wake of its result yesterday, so that's done good things for the share price. South32 out with its result today. Initially a negative reaction, but now putting on about 0.8%. But there's that MinRes share price performance that we're talking about, really in relation to that dividend being ditched.
And I think we've got retail stocks there too. Lavisa, of course, was punished earlier in the week, down 2.4%. Harvey Norman still waiting on that one. JB, Wesfarmers, you mentioned, Premier Investments, and Cettire not there, but it was a big drag today.
Yeah, certainly so. And Harvey Norman, I think, reports tomorrow, if our calendar is correct, which sometimes, I know that Harvey Norman's usually a laggard a little bit later in the season. Wesfarmers, it reported a 3.7% rise in its full year profit, but really I think it was a statement about the first few weeks of trading in the full year, FY25, what we're in right now, that really took the wind out of its sails.
Yep, and Cettire we talked about, 18% lower on the day after its annual profit missed estimates and was down 34%.
A few corporate governance issues around Cettire as well. I dare say that, there won't be any founder selling tomorrow, maybe. Qantas, I'll be interested to see what the brokers have to say tomorrow, because, drop of 28% in profit to $1.25 billion. It's had to kiss up to its customers, if we can put it that way. And also it flagged that international might come under a bit of pressure.
You were away, I think, when Qantas had a little bit of a blip this week whereby a number of customers were able to book first class tickets
Oh my God.
for more, like basically the cost of economy, and Qantas has honoured those customers with business class tickets, not first class, business. Still not bad. All right, MinRes we mentioned down by about 8%, and IDP Education, this is an interesting story. Look, it plummeted yesterday, but rising today after we heard that cap on migration, or student migration I should say.
Yeah, I was in Canada on holidays, and that made the news in Canada. This cap on the student numbers. Of course, they've got a very similar approach, an economy that is becoming increasingly reliant on student numbers. All right, so that is the big picture summary of what happened today. Let's get the detail with Jimmy Jang, who's joining us from Macro Capital. Jimmy, to start, just a thought on today's session.
Hello, everyone. Yeah, no, look, as you guys just kind of highlighted during the reporting season, it's going to a little bit of a volatile day today as well. But I think the investors were slowly adopting or digesting some of the key data that was released throughout the week. So starting with the capital expenditure, the Australia's seasonally adjusted total new capital expenditure saw a decline of 2.2% in the June quarter compared to the previous 3-month period. So this drop was driven largely by a 3.8% decrease in spending on buildings and structures, along with 0.5% slips in investments in equipment, plant and machinery. But it's really worthwhile noting that within the mining sector, the capital expenditure actually increased by 1.5% from the previous quarter, whereas the manufacturing sector faced a sharper decline of 6.4%. So obviously the most important data, the CPI data that we saw on Wednesday, rose about 3.5% the year to July. Interestingly, this kind of does mark down as a slowdown from June's 3.8% gain, but it definitely did exceed the expectation of a 3.4% increase. And on top of that, the core CPI saw a softer than the 4% increase to 3.7% in the previous month. So largely, well above the RBA's target of 2 to 3%. So on top of that, last week we saw the RBA making it pretty clear that a rate cut is not on the horizon, at least in the short term. So the board also highlighted the possibility of extending its already high interest rate, which are currently at a 12-year peak, to further combat inflation. So this stance is including us have left many investors in the market to reassess the implication of this persistently high inflation on top of the Nvidia's report that we saw overnight as well. So overall, we're just kind of trying to be quite conservative with our approach in the Australian market at the moment. We're going to go increasing our exposure a little bit more in the US and also in the Indian market as well.
Yeah, we might get to that in a moment. But speaking of what you're looking at in the Australian market, I mean, Viva Energy came through with its numbers. Macro liked it.
Yeah, and on top of that, we have 12 brokers that cover the Viva over the last couple of days, and 3 have maintained a hold position, and 1 Goldman Sachs upgraded to the buy, and 8 of strong buy. So just the industry as well, including us, we kind of slowly liked the Viva. As you said, the Monday they released their half-year results and revealed a 25% increase in their EBITDA to $452 million. Their forward guidance is looking really strong, and technically they're also looking very strong as well. So we've entered the position straight after the report on Monday. That gave us a risk to reward ratio of between 1 to 2 to 1 to 3. So that means that we just need to be right 33% of the time for this Viva play to work in our favor. And they paid a really reasonable 5% fully franked dividend as well. So their ex-dividend is coming on the 9th of September. So that's why we've kind of made a small allocation in a couple of weeks. And then after we've seen the ex-dividend, we might add some further up. But it's also on top of that oil price as well. Obviously, over the last 2 immediate days, there was a bit of a turbulence in the oil market. But because the restrictions in the Libya, they released their total closure of their oil fields because of their political conflict and their ongoing regional tension, and also the missile exchange over the weekend as well, really kind of puts a lot more higher demand for oil. So we, on top of the macroeconomic view and also the company earnings, we liked it, so we bought it a couple of days ago.
Oh, okay. So there you go. There's a buy coming from the team at Macro Capital. I've got to go back to that India throwaway comment that you made, because we don't talk to you, Jimmy, about the Indian market. So why? I think you said you're looking at it quite positively. Why?
Well, we've been monitoring the Indian market for a while, especially in the Australian market is looking a little bit choppy for over the next couple of months. So we'll be taking an exposure on the performance of the Nifty 50, which is the Indian market index by way of a structured product. But I think, as you mentioned, it's pretty essential to kind of know why we like the Indian market. So one of the things that really stood out to us is that India is probably one of the largest economy currently maintaining a real GDP growth rate between 6 to 8%, coupled with a nominal GDP growth that exceeds 10%. So these impressive figures, in our view, is just not like a momentary growth. It probably will be the part of a larger trend that we're seeing. So the broad industry analysts are expecting by 2028 that India, it will probably become the third largest economy in the world, trailing just behind the US and China. And that kind of rapid economic expansion presents a huge opportunity for us where, macro, we believe growth and stability is the absolute key focus when we are allocating a position. And on top of that, we've seen a remarkable improvement in both liquidity and breadth in the Indian market. So put this in a perspective, about 10% of listed companies in India now have a market cap exceeding $2 billion. And the average daily volume of these companies surpasses $15 million. So these metrics are particularly notable when compared to, let's say, other Asian markets such as South Korea and Taiwan, where the similar figures are often lower than the Indian market ADV. So this kind of increase in liquidity and the market size really kind of puts us in an assurance that, and also enhances our ability to enter and exit position with ease. And another critical aspect of the Indian market is the rising influence of domestic funds in India. So, Indian funds are widely known for their longer period holding periods. So that really plays an increasingly important role when stabilizing the market. So unlike what we're seeing in the US right now, where a lot of foreign investors and fund managers are a little bit more prone to react to the short-term global events and a technical analysis, when we were monitoring the domestic funds in India, they tend to focus a little bit more on the long-term growth. So this kind of stability is invaluable when we are, especially during this time of uncertainties that we're living in the global market. So in summary, we kind of see the economic growth in India coupled with the deepening equity market and the stabilizing presence of the domestic funds make it a really compelling case for us and the market for us to participate. On top of that, India continues its journey towards becoming the third largest economy, and that kind of opportunities for growth and returns are poised to expand even further for us. So good day for us.
All right, Jimmy, thank you. Jimmy Jang from Macro, and we mentioned the stock of the day was Wesfarmers.
It was. I spoke with Jonathan Takadina, MPC Markets, Ben Richards from Seneca Financial Solutions. Let's take a listen.
I hate to say it, but I think we're close to a top here on Wesfarmers on the current trajectory. So, if you're holding, continue to do so. You've had a great run for the year, and you got to let your winners run. Fresh money, I wouldn't put it in here right now. I'd be kind of waiting for a pullback down to maybe the low 70s for an entry. So at the moment, they've great results, but for at the moment just a hold.
Okay.
So fresh money, I wouldn't put into play. But if you've still got it, just continue to enjoy the run.
But it's probably just a bit richly priced for us. You can see kind of what happened to the share price last time. It got to a 30 times PE, which is its all-time high valuation, and that was a negative year or 12 to 18 months that preceded it. So yeah, it's not one that we're chasing. We think there's probably better value within the sector, and it's probably a sell if you're trying to optimize your return.
A little bit of a differing opinion coming from my two guests there, but it was a cracker of an episode of The Call. We had two double buys. If you watch the program, you know what that means. And
what were they, or do we have to watch the program?
I'll give you one, Fiducian, which you spoke with India Singh.
Yeah, India's lovely. Yeah, interesting. Okay, I think I do remember hearing that when I was out there. I'm going to pretend I did anyway. All right, let's have a look at the market leaders on a down day. Weebit Nano, you having a good day?
Oh, yeah.
Up 15%. Bega, this after its results. Everybody likes a bit of cheese. 9% higher. Spark New Zealand and Flight Centre looking good. Flight Centre, of course, had that big return to profit and above COVID-19 levels yesterday. And IDP Education, we mentioned the student migration caps.
Yeah, Bega, cheese and Vegemite. Okay, Red 5, Boss Energy. It was the laggard pretty much the whole day today. And it was out with its result. The brokers weighing in already saying that its FY25 guidance was a miss. That's according to RBC Capital Markets. Boss Energy also down by close to 9%. So again, a lot of this just in the wake of results coming through. Calcium shedding 9%. It did see its price target cut 27% by UBS, and also Macquarie down by 38% after its results presentation. And Karoon, even though it returned money to shareholders, it has seen the brokers weigh in today. And yeah, that's why its share price is coming under pressure.
All right, let's have a look at the small end of town. I never know if it's EZZ, EZZ, but anyway, as Life Science, up 27%. Bitnana, we touched on Imugene, Highfield Resources, and Centaurus Metals.
Let's flip the page, see what happens here. And I can tell you, if you're interested, well, there's Phoenix Resources off by 12%, which reminds me of David Novak. He's the first person that introduced me to that. He will be on the call tomorrow. It's a technical analysis special. So we'll see if that one comes up. But yeah, just on the small cap piece, I just hosted the 3 p.m. and there was a number of small caps. Dropsuite, which is one that's mentioned quite a lot. Spoke with the CEO of that. If you'd like to see any of those interviews, we're getting them up online. And you just look for CEO spotlights. I got to say, credit to the team. Our website is just a wealth of information for investors coming straight from the horse's mouth. It really matters to hear what the CEOs are saying around reporting season. And there's just, there's so many up there.
Yes.
If you got some spare time.
We had some really big name, big guns, shall we say, along with a lot of the not so big guns who are also very important, and some really interesting investor insights as well. All right, let's have a look what's happening overnight. Well, GDP for the June quarter from the US, also pending home sales and advanced goods trade balance in the US.
Yeah, I guess the big one for us this week was the monthly inflation read that came yesterday. I can't see anything big on
tomorrow's retail sales, though.
Is it?
Yeah.
Okay, let's see. What's on tomorrow? Yeah, there we go. Retail sales. For July, private sector credit. Dicker data, Downer, Harvey Norman coming through with earnings as well.
Yeah, and I guess the official end of reporting season, but we know that sometimes they trickle through into September as well. Can you believe September is around the corner? One more day of August reporting season. We are going to bring that to you, of course, tomorrow, but let's have a look at where the market has finished the day's trade.
Yeah, and I think that we will still be talking about Nvidia tomorrow because it does have Frankfurt listed shares, which I always find interesting, but they have fallen 7% upon the open there. Around the region, we did see shares tracking those Wall Street futures lower throughout the session on that Nvidia disappointment, and then of course idiosyncratic news that's coming through here locally, particularly in relation to reporting season. So by the end of it all, the SIBO is down by about 0.2%, but the S&P ASX 200 off by 0.33% at 8,045.
All right, another big day tomorrow. Rounding it out, we've got a lot of CEO interviews again. We also have the last call, so some really good guests joining us from 3:30 p.m. Eastern, but we will be live from 9:45 a.m. Eastern.
See you then.